Hey everyone, Couch Investor back on our earnings video for today. So, Alibaba just reported their quarterly earnings. Stock is down around 8% at the time of making this video. They did beat the estimates on, EPS, it's EPADS, so earnings per ADS, but they did miss on revenue. Now, they did also announce a interesting thing, an annual dividend. Yes, you've heard it right. They're going to pay an annual dividend of just $1 per share, that is. Of course, we're going to have a look at that. But first, let's start with a couple of comments here. So, Alibaba Group delivered a solid quarter marked by renewed momentum and energy across multiple businesses as a result of our strategic reorganization. We will remain an entrepreneurial mindset. We are committed to investing for growth and making bold decisions where necessary. Through a more flexible organizational governance mechanism, we aim to capture brand new opportunities from the ongoing AI technological transformation and create more value for our customers. As for comments from the CFO, under our capital management plan, we are prioritizing investment in technology and innovation for our businesses to drive new growth. We are confident in our business fundamentals and are pleased to announce our first annual dividend distribution for fiscal 2023 with an aggregate amount of approximately $2.5 billion as part of our continued efforts to enhance shareholders' returns in addition to the ongoing share repurchase program. And so if we scroll down, our board of directors has approved an annual cash dividend for fiscal year 2023 in the amount of, it's going to be $1 per ADS payable in US dollars to holders of ordinary shares and holders of ADS. As of the close of business on December 21st, 2023, Hong Kong time and New York time respectively. The aggregate amount of the dividend will be approximately $2.5 billion. Going forward, we will continue to review and determine the dividend amount based on factors such as business fundamentals, capital requirement, among others, on an annual basis. They say here, in addition, during the quarter, they repurchased approximately 18.6 million ADS, the equivalent of 148.4 million ordinary shares, for approximately $1.7 billion under the share repurchase program. As of September 30, they have approximately 20.3 billion ordinary shares, the equivalent of 2.5 billion ADS, outstanding, a reduction of 138.9 million ordinary shares from last quarter. And $14.6 billion remained under the current share buyback program authorized by the board, which is effective through March 2025. Now, I'm sure some people will say, okay, great, we get a dividend, but I think most people are disappointed that they're not just buying back more. Will have to pay taxes on that. Repurchasing of your own shares does not really impact, tax-wise does not impact shareholders. Actually, shareholders gain much more from a share buyback program than from a dividend, especially just a dividend, an annual one. So, although some might be happy with that, I just don't see why they're doing that. I know there have been some laws and rules in the past, maybe still in China, about how many shares you can buy back from your own company, your Chinese company. Depends on how the rules have been changing throughout the years, but yeah, there is that. So, let's have a look at the overall numbers from the business. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, let's have a look. Total segment revenue increased 9% year over year. And of course, there are different segments. So Taobao and Tmall, that increased 4% year over year. By the way, quarter over quarter, I believe most segments are down quarter over quarter. Alibaba International Digital Commerce Group, that's up 53% year over year. The international segment here is really doing extremely well. Local services up 16%. China, which is the logistics one, up 25%. Cloud is really not growing that fast. Again, only 2% up year over year. It's up a bit quarter over quarter. Then Digital Media Entertainment Group up 11%. Then as for income from operation, we're up 34% year over year. Diluted earnings per share and per ADS, of course, a huge increase year over year. Profitability has really become the topic for 2023, especially when it comes to Alibaba. Then with regards to cost of revenue and operating expenses, we're basically remaining flat. As for the income statement, so income from operation, that's up 34% year over year. Quarter over quarter, I believe we're down a tiny bit. Net income, of course, huge increase, like I said before, huge increase year over year. 2022 was really not a good year for Alibaba. Lots of things to take into consideration there. Then as for free cash flow, we're at close to $6.2 billion for this quarter, which is also a small increase quarter over quarter. So that's great. Again, with this amount of free cash flow each and every quarter, you would have thought that they would be buying back more shares. Then if we look at revenue for each segment, which we've seen before, but how profitable are they becoming compared to last year? So Taobao and Tmall Group, of course, we've seen revenue grow 4% year over year. Adjusted EBITDA has now increased 3% year over year. When it comes to the international side, so Alibaba International, that has increased revenue-wise 53%, but adjusted EBITDA has increased 49%. Still a loss currently, but becoming more profitable. As for local services, that increased 23% year over year, still a loss here as well. The logistics one, huge increase in adjusted EBITDA year over year by 625%. As for the cloud intelligence group, although revenue isn't growing that fast, it is becoming a bit more profitable. So that increased 44% year over year. Digital media and entertainment increased adjusted EBITDA by 44%, and all the others increased by 50%, still a loss. So this reaffirms and continues the trend that yes, revenue, there is a reacceleration of growth, of course, compared to 2022, but also on the profitability side of things, things are still becoming better and better. Now, I do want to touch on the international side of the business because we did talk about Sea Limited, Shopee. I know there's a lot of talk about Shine and Temu, but don't forget about Lazada, don't forget about AliExpress and Trendyol, which is the business in Turkey. So they say here Trendyol delivered robust order growth while investing in its expansion outside of Turkey. By leveraging its product sourcing capabilities and supply chain advantages, Trendyol further expanded its footprint in the region. As for Lazada, that recorded double-digit order growth year over year during the quarter. Lazada continues to focus on improving monetization. As a result, losses per order narrowed quarter over quarter and year over year. This is the profitability side of things becoming better and better. Then as for AliExpress, that's executing its growth strategy under multiple business models. The established marketplace business, which saw double-digit growth year over year in the number of orders during this quarter, and Choice, which works closely with China to improve consumer experience, recently rolling out a 5-day delivery guarantee program in selected European countries. As a result, the order volume of Choice ramped up rapidly during the quarter. And of course, in times of high inflation, people tend to go to the cheapest option out there. Now, with regards to Cloud Intelligence Group, they say here that revenue excluding Alibaba consolidated businesses slightly decreased year over year, primarily due to our continued effort to improve revenue quality by reducing the revenue from project-based contracts that are of low margins. And such a decrease was mostly offset by the increase in revenue from our public cloud products and services. They also say that the improvements here in EBITDA was primarily due to improving product mix and operating efficiency. And so looking at the graph right now, we're back to, levels that we've seen before, a pretty good support area at around $80 or so. So yeah, nothing else here to add. It's under the 50 and the 20-day moving average. You're back in an area where we've seen strong support. So if you're one of those that keep buying Alibaba because you want to put down your cost average, yes, this has been an area where the stock has been holding quite strongly for a couple of times. So to conclude, in my opinion, still a okay quarter. Again, we were in a market where if you show a little bit of weakness, if you show a little miss, you're going to get punished. Again, you know my thoughts about dividends. In this case, repurchasing would have been much better. I mean, you're not really buying Alibaba for the dividend anyways, so maybe repurchasing would have been better. It's not like they've not been repurchasing their own shares, but maybe you wanted them to buy even more. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.